Good morning, everyone, and thank you for joining us this morning on our very interesting topic of how to transition your business. We have our great panel of experts here to discuss with you lots of different topics because let's face it, you don't know what you don't know, right? And they are here to help you come into some of those questions that might, give you the answers and things to some things that might come up if you're considering transitioning your business. So let me start by asking each of our experts here to just introduce themselves and give us a little background on them. And I will start with Lori Rabinowitz. Lori?
Hi, my name is Lori Rabinowitz. I lead the Green Jade Group in the Morristown, New Jersey office of Morgan Stanley. I specialize in working with individuals who are in the process of thinking about transitioning their businesses and all of the planning and investment management tools that go into preparing for the sale and then post-sale, how to live their best lives.
And thank you very much, Lori. Now, next, I will ask Dr. Jean, the results queen. Can you please tell us why you are Dr. Jean, the results queen?
I am Dr. Jean, the results queen. I have a PhD in business psychology, and I get results for my clients, especially for those who are looking to sell their business, because it takes about 3 to 5 years. And EOS is a system that you can put in place that will help you increase your multiple when you go to sell your business. And the idea behind that is that it's not relying on your people, it's relying on the systems. It's a turnkey process so that when you go to sell, you can walk away.
Okay, great. Thank you. We will definitely be talking about making your business turnkey because some people aren't lined up with that yet. So next, let's go to Marilyn.
Hi, good morning, everyone.
Thank you.
Yes.
Good morning.
Good morning. Hi, I'm a partner in our transaction advisory group at Citrin Cooperman, and I primarily work with companies, business owners that are thinking of selling their business, whether it's 5 years from now, hopefully in 2024, helping them understand the process, educate them as they embark in those conversations about what their financial statements are actually saying about their business, and help them come full circle as to what they know about their business, because they know everything about their business and they know their business best. But we want to ensure that the buyer understands that and that their financial statements are reflective of that.
Okay, great. Thank you so much. And finally, Kenneth, can you please introduce yourself?
Sure. My name's Ken Johnson. Nice to meet everyone. I am a wealth and estate planning strategist at Morgan Stanley. I've been at Morgan Stanley and Smith Barney for over 20 years. We help clients with planning matters. Even though I'm a lawyer, we don't do the legal work for them or the accounting work. And prior to my tenure at Morgan Stanley, I was a private lawyer in a big Boston law firm running their trust and estates group, and worked with clients planning-wise on their estate plan documents, as well as transitioning businesses from one generation to the other.
Okay,
and
great.
I will say, Ken and I are partners. So Ken is one of the resources of my team that we bring in to help opine on all planning, legal, and transition matters.
Okay, great. Thank
We
you.
work hand in glove together.
Little dynamic duo going on there. Wonderful.
Yep.
Thank you. All right. So I think we should just jump right into it. Sounds like there's a lot of topics that we could cover here on what businesses need to know. And, is there like I'm going to put this question out globally, to all of you, but we'll get an answer from each one of you, if possible. What should businesses consider if they're planning on transitioning? I mean, there has to be a good lineup and good records kept and all that kind of stuff. So what are some of the steps that they should follow, probably long time before they're even planning on transitioning, correct? I mean, so if I will start with Lori, why don't we just start with you? You're in my top left of my Zoom screen. So.
No, that's okay. It's great. I'd actually start with Jean.
Okay.
Because if we think about the process of getting ready for a sale and really thinking about how best to position a business, it first starts with the health of the business. And Jean can best opine on getting the business as healthy as possible to prepare for a sale. So Jean, I will throw it to you first.
Great, because then I'm going to throw to Marilyn next. So this is going to be, so Marilyn, get yourself prepared because it really
Yeah.
does start with me. And I will give a story where we were working with a manufacturer and she got the knock on the door. Someone wanted to buy her company. But when we started to really think about her selling her company, she was in no position to sell because she didn't have the right processes in place. She didn't have the right people in place. Everything was really reliant on her. And we started this then 3-year process to get her to a place where she is in position to sell now. She's not going to sell, but her business is so much more healthier because she has vision for where her business is going, all the right people in the right seats. She has data, KPIs that she measures every week. She has all of her processes, and the most important ones, not all of them, but all the most important ones that people would want to see are documented. All of her people know exactly what to do, and they're all marching in the right seats. And if you really think about the housekeeping of your business and the running of your business on the day-to-day, is it reliant on you or is it reliant on the systems that you're using? Because if it's not, you can't sell the business. But once you get all that in place, then you go to someone like Marilyn, because I suspect she's the next one on the list.
Yes, thank you. Yeah, so like I mentioned before, I work with business owners that have either been approached by a buyer or haven't thought of it. So I do sometimes come across companies that may or may not be ready to sell. But what we put together is a financial due diligence product that helps the owner and buyer, of course, understand what the earnings of the business truly are, meaning we will take revenue and expenses, that net income number, and strip out anything that's non-recurring, non-business related to really show what the true earnings is, along with calculating the working capital. How much money do you need to run the business? A lot of this does come from reported financial statements, but as Dr. Jean just mentioned, having everything in order is very important. So at times I do come in before Dr. Jean does, and I'm able to catch all these red flags. And it's very important for a seller to start asking these questions, start building their teams, because these things will come up. And it's best to know for yourself before somebody tells you this doesn't look correct, your inventory number isn't correct, you don't have the proper systems in place, you don't have enough people, and that can completely throw that multiple or that EBITDA number that skews the purchase price. So I come in to help you help educate you on that process and help you calculate those numbers so that you understand and can speak to them. So it's always best to understand what your actual reported financial statements are saying and what needs to be done for them to be truthful to how you carry your business.
Yeah, and what's interesting is Marilyn, sometimes I follow her, she follows me, but it's usually going like that. And then it goes to someone like Lori Rabinowitz.
Yes. And so what I do at the onset of any sort of discussion is understand what the prospective seller's true expenses are. And those are personal expenses. And as we all know, we could pay ourselves salaries, we might run expenses through the business in some capacity. And so really getting into the weeds of each client's budget and their true expense numbers, because then we can run scenarios of, based on the numbers that Marilyn has put together in terms of EBITDA and potential multiples, what is a reasonable expectation that you could receive for your business? And depending on that number, we then either put the process in place to build liquidity outside of the business, or we start working with someone like Ken, who will then help us put the estate planning process in place of understanding, is it important to mitigate potentially New Jersey state income tax? And what are the vehicles that we could do to help mitigate some of that tax? And so Ken, I will throw it over to you in terms of where you come into the process to understand if someone is at an estate tax exclusion range, how do we then get involved in terms of helping them think through the different vehicles at their disposal?
Sure. Well, I'll tell you from two experiences, right? When I like to joke about it, a real lawyer and representing clients directly, the thing is that the lawyer tends to be the transactional person, right? I get the call when the client has said, oh, by the way, I'm about to sign a letter of intent. And at that point, we're just trying to protect them, right? We don't have a lot of time for planning. We don't have a lot of time for planning from two perspectives, at least. One is from the income tax side, because that's one of the areas that the client's going to want to minimize as much as possible. And number two, from the wealth transfer side. So both of those areas require time, right? So I would always tell clients and the advisors that the earlier you can get the lawyer involved, whether that's the corporate tax or estate planning lawyer, the better off you're going to be, because some of the things that you could do pre-transaction are going to be lost. When you are about to sign that letter of intent, many of the things that I would talk about with the client are probably by the boards at that point. We don't have the ability to do a lot. I know Marilyn would probably have some input about the kinds of things the clients should be doing prior, 6 months, a year, 2 years before that to make this optimal. But I guess the one thing I'd emphasize to the folks attending the seminar is the earlier the better.
So can I just ask a question then? For most business owners, should they already be thinking about selling their business when they start their business? And
I'm going to take that on. I'm going to
Okay.
say absolutely yes. I had a friend who, not a friend, she was a colleague, and she would call it TLM, tender loving marketing, as opposed to tender loving care. And what she would do is she would buy businesses that needed tender loving marketing, thinking about who she was going to sell it to. And then every decision she made as she went through that business, she made as, I'm going to sell it to that person. What would they want to see? And I loved that idea because most of us as business owners, never think we're going to sell our business.
Right.
We're going to die at the desk. But the reality is like either die. There's only really 4 ways to leave your business. Like we're going to die. We're going to give it to we're going to sell it to somebody. We're going to give it to or we're going to give it to somebody, right? Or it's going to go out of business. Like those are kind of the 4 areas. And we don't think about that as business owners, even as a business owner myself. So the fact is that if we can start thinking now, and I was going to ask this to Ken, like to me, having in the lawyer conversation, having the Marilyn conversation, having the Lori conversation, way before you even get the knock on the door or you're thinking about retiring. And most business owners never want to retire. Just want to tell you that. But the idea is thinking about all of this and almost like insurance, you always have insurance in the table. Make sure that all of this is always up to date, like how you on your house, how you're always repairing your house every year, always repair your business every year. So that till you're ready, because I think Ken is so right. All of this is so last minute, as opposed to at any time I could be ready to go.
I'll share an interesting story with the group is that I worked with a client who started a business in 2000, and at the beginning it was a relatively modest revenue company. However, their manufacturing company, their product was amazing, and their revenue grew exponentially throughout the years. And so in about 2010, 2012 time, we instituted with their attorney, we talked to them about putting some of the shares in their company into an estate planning vehicle, what's called an intentionally defective grantor trust. I won't go into the mnemonics. It's a very complicated product. However, what that enabled the family to do upon their exit to private equity in an installment sale was basically get 30% of their business out of their estate into the hands of the next generation for their children. And so they created this amazing generational wealth for their family, whereby they're not paying estate taxes, I should say. They're within the gift tax exclusion amounts at the time. And it's an amazing vehicle for the family where the matriarch and patriarch are able to live their lives. And now these children are completely set up for the future. So and that transaction happened in 2015. So really getting ahead of everything in 2010, 2012 to put all of the documents in place was so paramount, because once the letter of intent was signed in 2015, it would have been too late. So I'll pause there. Ken, any anecdotes from your side?
Yeah, well, I have plenty of them. The only, the resistance that lawyers always have, they always want to tell bad stories, right? They always want to tell how the family's going to fight and things are going to go badly. But the opposite is usually true, right? Meaning that if you are given enough time and to kind of like jump on your example, if my client has a business that say it's worth $20 million, we think, or $30 million, and we have the opportunity, and it's going to be worth, we think, down the road, pre-IPO or monetization event, 50, 60, $70 million, we can use different strategies. Some of them, would take up most of this seminar, but we can use different strategies to essentially say, we can peel off a part of that business and transfer it to an estate planning vehicle such as the irrevocable trust you mentioned, or a grantor retained annuity trust. And we get an appraiser involved. They will give an appraisal of the value of, typically it would be a minority interest. It's not marketable, so discounts are available. So even though I'm giving away 25 or 50% of my business, that value will be reduced by, say, 25, 30%. We then transfer that to the trust or do another transaction that's similar in terms of the outcome. And then the company is sold, and it's sold for 60, 70, $80 billion. All that extra value is out of the client's estate pre-transaction, and all that value, as you mentioned, Lori, it can become a dynasty trust or an arrangement for multiple generations. So it's super powerful. And again, not to keep repeating the same thing, but the sooner the better. If you tell me you want to do this, a month before you sign your letter of intent, I'm going to tell you we're probably gone, right? We can't do that anymore. But those are great examples of planning ahead can have substantial benefits for the family.
And I think that's where we come in as advisors anyway, in our team, is having those conversations with the clients to understand what their true aspirations are. Most clients will come to me and say, I want to take care of my family, or I want to live my life in a way that I want to live my life and spend, whatever I want to spend, and I don't want to pay taxes. Those are generally the two comments I get the most. And so how do we, first of all, make sure at the fundamental level that the family is going to be okay? And then what are the steps that we can put in place all together collectively of how to mitigate taxes? Because I always joke that tax man's coming. It's just at what extent and how much complicated planning do we want to put in place prior?
Yeah, and I find also for a lot of business owners, especially those that have partners or in multi-generational wealth, they can't give the business up. And yet I remember a business owner saying to me, my dad gave me the business. He gave the cash to my brother. I really wish he had sold this business and just given me the cash and let me do something. So these multi-generational businesses, they get caught up and they're like, I can't sell. The reality is you can sell, take the cash off the table and do something for your family, like the generational wealth that Lori just talked about, because nothing's going to last forever.
So let me ask that question, Dr. Jean, and I don't know who's best to answer it. Maybe all of you probably have a perspective of this. Why don't business owners let go of their businesses? What is their hold? Are they afraid of those things? Are they afraid of not being able to take care of their family? Are they afraid of having to pay those taxes? So what are those reasons that they don't want to do this, or are they just not ready for it? Because they haven't had all the parameters in place since day one, the proper documents, a good advisory team, good lawyers, what's the answers there?
So Marilyn, maybe you
Marilyn, go first.
Yeah, Marilyn,
Yeah, so what
I would imagine that you're on the precipice of doing all of the financial work, presenting people with the data, and then seeing where things might fall down. So yeah, Marilyn, please go.
Right. So why people wouldn't want to sell? So they're coming to me and they're engaging me because they do want to sell. They do have a reason to sell, whether they don't have a succession plan, anybody in their family take over, or the family's just sick. For example, I was working with a company who was 3 generations in, and finally someone posed the question, what if we sell? So they brought us in, they brought a valuation team, they brought us in to understand what their business, its EBITDA is representing, working capital, what the margins are saying of the reported financial statements. And again, 3 generations in, and that first generation was still alive. So those conversations were very emotional, very overwhelming when I was part of the table. You know, the first generation, you had half of the party saying, yeah, whatever's best for the family. The other generations, no, we want to hold on. Second generation, who is in the executive level, are holding on to what their fathers are thinking. We should keep going. The younger generation, half of them did want to keep the company. The other half was just like, no, I can do so much better. Or if we do keep the company, I'd like to run it my way. So we were really brought in to help them have those conversations internally before they went out to market, or even brought in a banker or anybody like that, just to understand where their businesses are, where the flaws are. You know, the vendors, just to kind of revamp their business. The vendors they were using weren't efficient, and they were having situations and cost problems. They wanted to bring in new accounting systems. So all in all, it's all a very emotional process. When it's a family business, specifically, people want to hold on to it for tradition, or not, you know, afraid of disappointing others in their family and whatnot. And then, you know, you then have those boomers that, you know, they should have sold when they were in their 50s, 60s. Now they're entering their 70s and they're still gung-ho. I can still run this for 10 years, but should you be running this for 10 years when you don't have the proper help, and you should enjoy, you know, your life at that point for sure. So, so what I see, it's a very emotional aspect. The other aspect is, what am I going to do with myself after I sell the business, right? And that's when they need help. I can't tell you how often I'm working with entrepreneurs who develop in this business, and all the cash they've earned has just gone straight into their business. And they never really thought about, and they've been renting in New York City this entire time, don't even own property. And so just having these conversations with, again, it's building your team and having these conversations to be educated on what you can be doing, and helping someone see what was going to happen when you cross that line and selling your business, to know that you're going to be okay, right? Business owners, all they think about their business. That's all they've done for the past 30 plus years. So again, just that's what I see, them not understanding what would happen after selling their business. What do they do with themselves? And businesses not wanting to sell because of the family, or that process takes a little longer for everyone to be comfortable.
Yeah.
I would agree with that, Marilyn. I was working with a family who, the patriarch whose business it was diagnosed with 2 different types of cancers, and was getting weekly injections of immunoglobulin to sort of help his blood stabilize. And the family, they went down the path of sale, and the number that they were going to be receiving was ample to sustain the family and generations. However, when it came time to sit at the closing table, the patriarch was so reluctant that the family actually had to have a family meeting with a therapist to understand why he just wouldn't let it go. And then as soon as he sold it, he was aged. He was in his 70s, and, you know, really, again, with 2 types of cancers, really shouldn't have been starting another business. He immediately wanted to put the cash into a brand new business. And so a lot of it is couch time, as I call it, where I wish I had a psych degree to really help people think through what is it they're going to do after the baby is grown up or out of the house.
Mm-hmm.
So I agree with you more.
And I'm gonna pick up where you said, Lori, 2 things. One is 4 stages of business that I learned. I wonder, I blunder, I thunder, I go under. So I wonder if I can do this business. I make every error that I possibly can make. I make a ton of money, and that's when I should be selling this business, because I didn't sell it. It's going under. So, and entrepreneurs are very reluctant to let it go. Because of the fact of, what am I going to do when I'm done? And as a business psychologist, we work with entrepreneurs to build a different life. Because think about it, I have 60 hours a week to fill. what am I going to do with my 60, my 40 hours, or my 80 hours, or my 100 hours? What am I going to do? And we had a woman who wanted to sell her business, and she came to me, and we created a whole life. It took a year for us to create a life for her of her 60 hours a week once she sold the company. And we did it before she even sold the company. So she knew when she did the check that she was going to go travel. She learned how to swim. She learned how to do a gun. She started to do volunteer stuff. I mean, there's so many energies that entrepreneurs, she sat on lots of boards. We applied to board positions. So the fact is that building the life while you're still in the business of what you're going to do afterwards really helps in the 11th hour when you go, I can't let go. I can't let go. I can't let go.
And do you have any comments on this before? I also would like to just ask our audience that if you do have a question, there's a area on your Zoom where you can type in any questions, and I will go through them, and I will definitely ask our panelists. But Ken, did you want to add anything? Because I also have 2 comments on what everybody has so far said that I'd like to ask about in a minute.
Yeah, I think that I agree with what everyone has said so far. And you know, it's funny that we keep on using the word family, but family to a lot of business owners is not just their biological family. They think of their employees as family. And so one of the roadblocks I frequently encounter is what's going to happen to my people, right? I don't want some private equity firm coming in here, firing half my people, and they have bonded. Some of these businesses have been run for decades. They have bonded with these people they work with as if they are true family. So, you know, part of what we try to do is, you know, structure things that they can take care of those employees. Many times that might not mean that they can keep their jobs, but it could be diverting some of the proceeds, either pre-transaction or post-transaction, to those employees. It just makes them feel better about moving forward because, as we've kept on saying here, this is a combination. Yes, it is technical. There's tax issues to be considered. And what am I going to do with my life afterwards? But there are roadblocks, and this is one of the roadblocks that I frequently encounter is, you know, how can I do this? I feel like I'm being disloyal to my family, which includes my biological family as well as my employee family.
And,
So-
and
oh,
to
sorry,
Ken's
Jean.
point, it's not just family-owned businesses that get sold. You know, solopreneurs sell their business partners sell their business. And I see a lot of times in business partner business, meaning like we're not family, but we may have been friends and we started this company. One wants to sell, one doesn't. And having those challenging conversations, because the one that doesn't is usually the one that wins.
Right.
So the fact is that you have to be constantly having, if you're in partnership with someone who's not your family, you need to be having these conversations at least every year of what are we going to do? When do we want to sell? What does it look like? If you don't want to sell, why? Because remember, wonder, blunder, thunder, go under. You're going to be in one of those phases. So you need to have these challenging conversations with your partners, or even if you're a solopreneur, and I mean to say that because entrepreneurs can run a business by themselves, having those conversations with your spouse or your children or your best friend to know what you're going to be doing, because there's going to be a time where you're going to have to leave your business. How are you going to do it?
So I do hear from each of you that, you know, you talk of the business owners having these advisors. How do business owners assemble their team of advisors? How do they know who they need and how many people do they need? It's not just one lawyer. It's not just a wealth management. Can somebody pick up on and when do they start doing this? Is it, again, way early on in the business that, you know, you should already have this team?
No, but they start with their accountant, Marilyn. I know they start with
Yeah.
that.
Yes.
Hey,
I
by the
agree,
way,
Gina.
big thing and it always starts with the accountant.
It does. It does. I'm fortunate enough. Again, I work for Citrin Cooperman, which is a full service accounting firm. So a lot of the sell side clients I do have are internal clients. So as soon as they start thinking, hey, I think I'm going to sell my business, or maybe I should sell my business, I field a lot of those calls and conversations. So I'm in a great position to be able to, again, educate them in my process and then high level the rest. But I'm able to then direct them to several different people within this chain to help them understand it's not just the numbers, right? That you need to think about what's happening today, what you want to see tomorrow, and are you taken care of with your taxes and your trust and estate, et cetera. So it does fortunately often start with accountants for sure, right? You have your tax accountants if you're filing taxes and you're compliant, and or if you're working with a bank, right? You have that relationship with the bank if you're they're your lender and whatnot. But yes, we are fortunate enough to be able to field those conversations, and we help them enough to make the proper introductions. And then we take it from there. It evolves from there.
And so Marilyn, then would you recommend, as an accountant, you would recommend somebody else as part of an advisory team for a business, or do you just help them to that aspect with their monies and their
Absolutely no. So in the accounting, we have several departments, but as soon as you think about going out to sell, what does that mean? Right. We have, there's valuations. How much is your business value today? Are you okay with that? If not, then let's bring Dr. Jean in, who can tell you how to maximize your business. And you can sell for 10 million today, but if you put these, improve your margins, increase revenue, then maybe you can sell for 20, 25 in 5 years from now. Right. So those are conversations about the structure of your business, and then helping them understand tax savings, right? The basic conversations of like, should I move to Florida? Probably now, yes. If you're going to sell your business, save taxes. I'd like to go back to Ireland, right? If they're Ireland natives, what does that mean for tax purposes? And what needs to be put in place today for it to be, beneficial when you do sell your business and not a fire drill? And then you think about going out to market, investment bankers, right? Do you need, depending on the valuation of the business, do you need a broker? Do you already have strategic buyers poaching you and having that conversation? And that's what, lit the light bulb. If not, then we can certainly help make introductions to investment bankers that can give you a better insight on who the buyers out there are today, what they've seen, help you understand the valuation of your business as well. Is that something that you'll get today, or wait for it, et cetera? So there's multiple advisors doing different things.
Okay, we have a question that came in from one of our participants, and it's, in what scenario would you advise against a business owner selling their business?
I think if the plans are to leave it to the next generation, then obviously not selling it, but coming up with a plan of transition. And so will the matriarch or patriarch be involved in the business? How will they exit their involvement? How will they exit their financial dependence on the business to unburden the next generation? So I think it's not necessarily selling, but how do you transition it effectively to ensure that the next generation not only is successful, but might not feel the burden of support of the matriarch and patriarch if the matriarch and patriarch decide that they want to go travel the world and live their lives sort of post-business. But Ken, I'll also bring you into this conversation and see what comments you have, because I'm sure you've seen across multiple advisory teams, because Ken not only works with me, but other advisors within Morgan Stanley, other scenarios.
Yeah, I think that I would obviously agree with what you just mentioned, which is I've got my client who has their 26-year-old, right, who's just starting in the business. The client doesn't know whether they're going to be qualified to succeed them. We need some time, right? So doing it now is not going to probably be the best idea. So having family members in, or even if it's not a family member, as I mentioned before, it's trusted employees who are moving up the ladder, they just don't feel it's the right time to do that, then that's probably not the right time. Economic conditions obviously can influence all that we're talking about here. If it's a bad time to sell your business, it's not a good time to sell your business. So you're not going to do it at that point. I would say that, most business owners know that part of it, right? They know that it's not a good time from an economic standpoint, product development, whatever there's got going on. But a lot of times it is going to be, I've got my kids who are very young. I don't know if they're going to make it or not make it. So I'm going to probably delay that, kind of a decision for a while.
And also, I'll just chime in as well, is that that's where financial planning becomes really, really paramount from a budget perspective and investment trajectory perspective. Because if we understand that, say, matriarch and patriarch are not going to be selling their business and transitioning it to the next generation, how do we build their repository of assets outside of the business so that way they can live on a separate set of dollars outside of sort of the business feeding them, and allow next generation to run the business? And so that's where our team comes in. If we can come in obviously as early as possible to help put a plan in place of budgeting and automatic savings, and what are the plan for those savings. And that's often how I tell my clients, we're going to pay yourself a bill each month, and what amount can we take out of the business in terms of liquidity each month and further get into the market, and building that portfolio to act as a ballast to the risk that they have in their business.
Okay,
And
I have a question.
Wait,
sorry.
I'm gonna jump in on this because a lot of because notice the question, like, when is it not a good time? Like, when should I not sell my business? As opposed to, when should I sell my business? It's such a typical business owner mentality of, I always want to hold on to my business. And the reason is because either I started or I inherited. If you think about it this way, being a business owner is a job. There's like, you can either work for a company or you work for yourself, and you're getting paid. And many people who work for corporate America are thinking about 401ks and their retirement and where they're going. Business owners need to think the same way. Like, this is my career, and eventually my career is going to sunset. How do I want to do that? And business owners have a very hard time thinking about it. But I say to them, it's the same kind of job. You're just not in corporate America. You're in your own business. And so when you say, like, when is it not a good time to sell? Obviously, as Ken said, in economic times. But why not change that around and say, well, what life do I want to live that this business is going to support me in? And can the business run itself without me? And that's really where you want to get to, because if your business can run without you, then you can sell it any single day you want. And the challenge is that most business owners don't think that way, or they think this: my business is worth so much more because I put so much blood, sweat, and tears in it. So having someone like Marilyn come in and evaluate it on a yearly basis, 5-year basis, because you need to know how much your retirement, my 401k of my business, is really making me. Because if you were in corporate America, you would work and think differently. But the reality is that it's a job, it's a career, it's a lifestyle. And how is your business helping you getting there? Rather than, when should I not sell it? No, what's your life going to be like? What do you want it to be? And that's really important. And that's why I think for Marilyn, coming in and doing the assessment work to know exactly how much your asset, it's an asset, is worth, is super important.
And to that, let me ask this question, and it's a question from one of our attendees. But sometimes in partnerships, in family businesses, one member wants to sell.
Mhm.
How do you go about with that conflict when only one person wants to sell? I mean, it's not always a buyout. It's not, and how do you know, right? So I'm just going to throw it out there. Dr. Jean, you
Oh, no, I'm going to throw this to Marilyn. And
okay.
First, I'll take the psychology stuff at the end, but let's do the,
Okay.
Because the reality is this is a really big challenge for lots of people. Yes, right? Yes.
Yeah.
So
Yes.
I'm going to throw it to Ken. I mean, Ken probably's got a story about this. I'm throwing it to Ken first.
These things can really be bad, right? Back to my story about, we always tell bad stories. If I have 2 partners or 3 partners who aren't all on the same page, and that happens a lot, it can either be, okay, we're going to continue the business, we're not super happy about this, or, what I would tell people, I'm going through this right now in a case that I'm involved in. I have one party who doesn't want to sell the business. We have to come up with a way to buy them out, right? Whether that's going to be with existing funds, I know they don't like it, but if we have to borrow some money to pay them off, and there are different ways, corporate-wise, that we can do that without actually putting up all the money up front. I was involved with a case many years ago. We had 2 owners who did not want to sell. We restructured the company, recapitalized it, we essentially issued them debt instruments. So they got their money paid out over time. And I can tell you this, once we were able to extricate those two owners, the business took off because so much energy, effort, mental impairments are involved when I have to deal with those kinds of things. And it can get nasty or it can be okay. But either way, if everybody's not on the same page, that's going to be a difficult situation for you.
Yeah, I will also say that it really depends on the shares of the company. Like I worked with a company where it was two sisters, 50-50, and one of the sisters wanted to leave and the other sister, one sister wanted the other sister to leave and the other sister wasn't leaving. And they had 50-50 and they ended up in court. And that's really not a good place to end up. So the fact is that everything's going to sunset sometime. You can do it disruptively or you can do it graciously. And there's tons of ways to buy out a partner, as Ken just said, to sell the business. So if one person wants out, then that's the conversation that the two partners need to have. And what does that look like? Because it's really then the selling of between the two partners. But don't ever, if you're the partner who wants to get out, don't ever stop, because like I had another client, brother and sister, knock on the door. Sister wanted to sell the company. Brother didn't want to. The sister finally said, wow, what will my brother do if, she literally says to me, what will my brother do if we sell the company? We better not sell. And guess what happened? They were thundering. Then they went blundering. Then when they went to, going undering and they had to rebuild the business back up. So the fact is that we care about people. It's disruptive. It's messy. It sucks. But having that communication is really important with your partners to pre-need, like, what do we want to do if you want to sell someday and I don't? What do we want to do when the knock comes on the door? Let's have those conversations now before they ever happen. And let's document what we're going to do so that when it does, we can go back and say, oh, remember we talked about this? This is what we agreed to. Oh, just doesn't happen.
So that's one thing that could derail or transitioning a business. What are some other things that might go wrong and derail or transition? I mean, there must be a laundry list of that too. And everybody's got a little smirk on their face. So you all have stories, I can tell. Go ahead, Marilyn. You
Yeah,
remember
for
stories.
me so for me on the buy side, because essentially coming in from the sell side, so we don't have these kind of issues, but very often when I'm on the buy side, whether I'm working with a strategic buyer or private equity, I'm looking at financial statements and putting together this quality of earnings product, right? Understanding the business, their margins, their earnings, working capital, all the good stuff. But in many cases, I'm presented with financial statements that are on a cash basis. And not to get too technical here, but when you think about purchasing and EBITDA and working capital and purchase price, everything needs to be based on an accrual basis, which is GAAP here in the US. And, I can't tell you how often I do get financial statements that are not on an accrual basis. And that's okay, right? That's okay because we know how to convert certain things. But when we're working with companies or on the buy side and looking at a seller's financial statements, it's very easy to tell that they're not on an accrual basis. How long is this going to take us to get to cash? Have they been recognizing revenue? We have to go back at least 3 years to get comfortable. What systems do they have in place? What manpower do they have in place to help us get to where we need to get to? So it's a long, overwhelming process, one. Right. As a seller, when you're not ready, it feels like an attack on your business. And we're not trying to attack the business at all. We're just trying to get the financial statements to where they need to be represented as far as accrual basis, right? Recording revenue when you receive cash and only recording expenses when you spend it, as opposed to when you're incurring and actually should be recognizing revenue. It's a concept that not everybody understands, and that's part of the education piece. Let me educate you on what's happening here so that you don't feel the attack, right? So on the buy side, we see that kill deals, unfortunately, when we don't have, when the sellers don't have the proper teams in place to help us convert their financial statements, when the seller is just completely overwhelmed and there is fatigue, they're just, this is taking too long, I don't understand. And, what they just need to understand is that they don't have things in proper place. And my buyer's still interested, but we just need complete cooperation on getting comfortable with your financial statements. So we see that often kill the deal if it gets to a certain place, or more often than not, we come in and we're just like, no, like they need to hire an accountant. They need to hire a third-party accountant to come in and close the books, right? Maybe it takes them 2 months to close the books, which isn't very effective when you're trying to sell your business and the buyer needs to understand what's happening right before closing and so forth. So not being prepared on accounting, I've seen it kill the deal very often. And also the mood, right? There's deal fatigue. If the seller doesn't have the proper representation on having the understanding of what's happening, why is this taking so long? Why are my numbers shifting? Why is it changing? And so forth.
Hey, Marilyn, can I ask a question?
Yes.
So I think I've made this observation before. Most of the people we deal with, this is the first time they've ever sold a business, right? They don't know what goes on here. And I know you used a bunch of terms in your discussion a couple of minutes ago. One thing that I see is like people are like, what is this quality of earnings stuff you keep on talking about? What does that mean? Can you just explain that to everybody?
Yes. So quality of earnings is this package that originally started with private equity getting comfortable. So it's different than an audit, right? People often think I need an audit before I sell my business and so forth. But a quality of earnings is a look to your business on a monthly basis for at least a 12-month period. So if we're talking today, it'll be 22, 23, and the trailing 12 months ending May of 2024. We're taking a look at your trial balances, your income statement. And what the product includes is your EBITDA calculation, which is taking your P&L, your profitability, whether we need to convert that from cash to accrual, it needs to be on an accrual closest to GAAP basis, and stripping out all those unnecessary expenses, right? Here's the revenue, the true revenue you've earned, and then you have family on your payroll, and you have all your vehicles on the expenses and travel and whatnot, right? You want a buyer to understand this is all non-business related, or there's a fire in one of your warehouses one year, and those expenses went out of control. So we need to normalize the business for what it looked like the past 3 years to ensure that you're representing your business. This is what my business is going to generate EBITDA going forward, potentially going forward. And then working capital, right? Looking at your balance sheet. This is another calculation that's included in a quality of earnings. What does a buyer need the seller to keep in the business for them to run properly and efficiently on day one, right? How much gas do you need to keep in the car before you sell it? And that is, accounts receivable. And I won't get into technology, but there's a calculation, right? Current assets minus current liabilities, but there are certain adjustments, right? What is the seller going to sell, take care of before the purchase? So that comes off the liabilities, accounts receivable, how much of this AR that's future cash coming into the business is actually not collectible, right? So there's a lot of calculations and considerations to be done there. And again, the quality of earnings product outside of the EBITDA calculation and a working capital calculation also gives a buyer an understanding of top customers and top vendors or purchases by vendors, the margin by product, if it's M&D, margin by product, by service. It's really this package that encompasses everything, that once a buyer gets that information, can understand the business in their terms, right? Not necessarily how the seller has been tracking in their accounting system. So the buyer's always going to have a counterpart doing the same analysis, same quality of earnings products. So having a quality of earnings products done on the sell side for yourself, one, it educates you. Two, it allows you to be part of that conversation. So you're not left out. There's a lot of terminology, like you mentioned, a lot of things that'll come up in conversation that is not part of your day-to-day. So being as educated, knowing your numbers and how it's being represented to a buyer is extremely important. That alone, and then a buyer comes in with their own team to put that same similar product, it does cut down significant time off of their end. They're obviously not going to just use our product, but at least they have a guide as to, okay, where are these additional add backs, and okay, this makes sense, doesn't make sense, and ask the questions. And so it's a huge benefit, and it's part of the education piece. So for anybody on the call that is thinking about selling their business, it's not a commitment. It's more of, you can have a conversation with any of us and we can get a little bit more into the details as to what it is we can actually provide and what product, et cetera.
Yeah, I always say talk is free. Don't think that you're making a commitment.
Yes.
And
I
so many
would
business owners
say,
are like, I don't want to make, I don't want to talk to you. I don't, well, not, information is power. Lori, what were you gonna say?
no, I was going to say from a wealth management perspective, where I've seen deals sort of derail, and this is what we try to mitigate, is the seller has a number in their mind, sort of like when you're selling your house. You know, your house is a very emotional thing. You think your house is the prettiest house in the world, and it is the most amazing thing that someone should so appreciate and, you know, pay as much as they could possibly pay for. Business is the same thing. And so if a seller has a number in their mind, say it's, you know, 20 million, say it's 40 million, say it's 60 million, what our team does is we will run a very specific set of models to show, what if you received 30 million? What if you received 20 million? And will you still be okay after paying all the debt, taxes, planning, what have you? And oftentimes that will help people make the decision of, okay, I don't need 60 million to sell my business, even though I would love it because it's the prettiest business on the street. Maybe I can get 40, maybe I can get 30 and still be okay and still do all of the things that I want to do. And oftentimes that helps people, you know, quantify and also qualify. Okay, I will be okay if I have these numbers, and this is what the portfolio that then becomes the business, which is feeding them, can do for me. Where we see it fall down is when clients are unwilling to either live by the metrics that we're putting together, or just still have that number in their head that is probably unrealistic for a number that they would receive, and then the deal goes south. And so I think it's truly understanding and being humble about the amazing thing that you've built, but also understand that in a negotiation, you want the most and someone wants to pay the least. And so how do we bridge that gap, and will you still be okay? And so that's a lot of work that our team does in preparation for the sale, or even years before, to help build a repository. So what if you don't get 40 million? What if you only get 20? What if that's what your business is worth when you go to sell? Do you have assets outside of the business that will help sustain you, so you're not beholden on this number? So, or beholden to this number. So I will say that's where we see some things either succeed or go by the wayside.
Yeah, and where we see it is more on the psychological side. So there's two things. One is, I don't give away stock as compensation. Like, I get a lot of business owners who are like, well, I gave Harry 15% because I needed to keep him and I really like him. And now, you know, Harry doesn't want to, Harry's giving it to his other kids, and but like, you lose track of things. So I'm always like, don't give away any portion of your business to anyone, because that stops. And what's Harry going to do, as Ken said? But I also get the, what am I doing with the rest of my life? And we had a business owner that we turned around her business, took us 2 years to turn it around, and then we grew it. And she was on the beach and talking to somebody next to her on the beach. And the guy said, I'd love to buy your company. And she came back to me. She's like, should I sell it? I'm like, oh, hell yeah, we'll sell it. So we sold it for $100 million. And as the conversations of like, oh, how we're going to sell, she's like, well, what am I going to do next? I said to her, what's the dream you always wanted? She goes, I want to own a real estate company. Great, let's own that. Like, what's the dream you've always wanted? And that's really what you should be thinking about when you get to sell your business. What's the dream I've always wanted? And if you say something like me, like, well, I'd like to work, then what's the next thing that you want to do? There's lots of places to volunteer. You could start another company. And what's great about the company she started in the real estate company, is her sons have now taken it over, because she talked about it as for their family, and that's what they wanted to do. The fact is that entrepreneurs want to help people. So help yourself, because that's the oxygen mask on you first, is what I always say. The other thing I'm going to say is this, is think of your company as a person rather than about you. The company is not you. The company is a person. And this comes from the days when I was in advertising. This is how big corporations think. Like, who is Skippy Peanut Butter? Who is Tide? Who is your avatar? If you were to describe your business as a person, what would you describe it as? If you were to take your business to my birthday party, and you said, hey, my business, name of business is coming to your birthday, how would you describe that person? And when you start to take yourself out of, this is my company. No, it's a company it's Skippy's company. It's my company's name is the Braintree. So it's Caveman Brain Company. That's who it is. And that person has a personality, and I'm helping that person. I'm helping him. Mine happens to be a him. I'm helping him run a advisor company. And eventually he needs to move on to something else. So when you do this exercise, and I will tell you, I did it with a client and they described their company as the Maytag washerman living in his mom's basement. And I was like, well, is that how you want your company to be? And they're like, no, we want to be Will Smith for Men in Black. I'm like, well, let's go build that. So we built the company to be Will Smith and Men in Black. And then they sold it because that's what the company, because someone wanted to buy a company that was Will Smith Men in Black, not the Maytag washerman guy who's living in your company. And I know it's a little creative and a little, but the fact is that it really helps you when you make your company a person, to start talking about the person, not me, not them, not my partners. Here's our company. Here's the name. What are we doing for this person? What are we doing for the name? What are we doing for Caveman Brain? What makes sense for EOS? What are we doing? It takes it out of you. And that's really important, especially when you're selling the company, because Caveman Brain needs to move on to the next person. And that's okay. It's all good.
That's great. I know that this has been touched on a lot, and Jean, you have touched on this a lot. What does it look like for business owners? You know, you sold it for your 20 million, 40 million, 100 million. Now, what does that life afterwards look like? Some entrepreneurs are habitual entrepreneurs and they just want to go ahead and start another business. Some do just want to be sitting on that beach under a palm tree with a drink with an umbrella in their hand. So, you know, but some don't even have a clue. But they just know that their time has come and they have to sell, it's time to sell. So what does life look like, or how do they go about knowing how to create that life?
Well, that's a Green Jade lifestyle question that goes to Lori.
So what we've created within the Green Jade group is something that we call the Green Jade lifestyle. And it's how do the families who we serve live their lives? What are their passions? How can we help make connections to help administer or further those passions? And so many of our clients who have sold businesses connect with each other and have created philanthropic giving groups, have created networks of, okay, I'm very interested in healthy food. And so now one client is growing healthy food on a farm that they've started. And I connected them with another business owner who sold their business, who's involved with Elijah's Promise. And how do we feed healthy food to people who are, food insecure? And so these are amazing connections that are allowing people to further their passions of still doing something and either running a business or being on a board and advising or mentoring, and also living their best lives and their passions. And so the Green Jade lifestyle is something that we have taken to heart and help our clients really think through, who do you need to know? What are you passionate about? At the basic level, what is it that you love to do? And to your point, some people like to sit on the beach. And it's like, okay, which beach do you want to sit on? Do we need to own a property there? Do you need to become a citizen of that country or, a resident of that state? What is the best real estate to buy? And then other people are saying, I want to start another business. Okay, well, let's take the capital that we receive from this business and bifurcate it to, this is your safety money where you're going to be okay. And then this is the money that you have to start another business, and think through all of those things. And then other folks are, I want to be philanthropic. I want to join a board. I want to mentor other new business owners. And we help connect them in ways that have enriched their lives. And so that's all part of the Green Jade lifestyle and something that we live on a daily basis with our families that we work with.
I would say, outside of that, for those entrepreneurs or business owners that aren't ready to retire and go sit on a beach, I think a lot of what they think sometimes is, I'm not ready to sell my company because I'm not ready to retire and sell my beach. But there's also that conversation that can be had. What is it that you love about your business? Like, do you like your client relationships? You can work for the new buyer and be, head of their BD, business development, or head of sales, or I've seen that happen often on my transactions. And, when clients are poached and then, their existing clients of the firm, they're like, I'm not really ready to sell. Like, do you think I can get, an executive position? I'm just like, Yeah, you can certainly have that conversation. Absolutely. Like we've seen it. If they have something that you fit in, you can. So I think selling your business doesn't also necessarily mean if that's what keeps somebody from selling their business. There's opportunities with the new buyer if it works out and you have those communications ahead of time.
That's a great point, I think. I don't think a lot of people realize that. I have a question from one of our attendees, and it is that there's a psychology and mindset of every business owner, and how do each of those play in the decision to sell their business?
I guess it comes to me, right? As
think
the
so.
psychologist, is that where that goes? So it's really interesting because I'm just going to play off of the last question. If you hear what we're all talking about, it's really about planning. It's about planning for yourself. And it's also about awareness of who you are and what do you really want. And as business owners, we often just put our heads down and work like maniacs to grow something that's amazing because that's what we started. So when you think about what kind of business owner am I, now I'll move into this question, is what is it that you really want in your life? And for many of us as business owners, and I can say this as a business owner, we don't take the time to really think that. And the only time I think about that is when I'm talking to people like Marilyn or Lori or Ken, because you can't do it by yourself. So if you really want to know like your mindset, because every single person is different, that's correct, then start to build yourself a team. I say this, Roger Federer is my favorite person in the world, but he didn't get to be where he is on his own. He had coaches, he had therapists, he had nutritionists, he had physios, he had a team around him that made him who he is today. And if you look at all the great people, athletes, authors, singers, anybody, they have a team of people. Entrepreneurs often have this badge of curve of I do myself, and if I don't do myself, there's something wrong with me. Or I don't want to spend the money because I don't have enough, or I need it, or I'm hoarding it, or I've spent it all someplace here. And always say when you don't have the money, that's when you're supposed to spend it. That's how I look at it as a business owner. And you need to have a team. Get yourself a team and start planning now and learning about yourself, of who you are and what you want to do. Because once you have that all in place, selling your business becomes super easy because you'll know when to do it.
That's great. Ken, did you have anything you wanted to add onto that?
Yeah, I guess, I would say this, and I know there are different kinds of businesses, but a lot of times we're focusing on family businesses. And this is what I get from my business owner. Who's on your board of directors? Well, it's myself, my wife, my son, it's all insular, right? It's their perspective is given from people who have a vested interest in either not selling the business or selling the business. They have no kind of outside perspective. And I often tell them, look at a public company, right? A public company will always have outside board members because they give them different perspectives. They can tell them things sometimes they don't want to hear. So even if you're not selling your business, I tell people, consider having, if you're not going to have an outside people on your board of directors, then have a council of advisors, somebody who can give you different perspectives, give you information about what's going on besides what your narrow slice of your life is. That just opens them up, right? Because if you don't have those outside influences, you can become a little wacky, right? If you're sitting in your home all alone every day, I'm going to tell you psychologically, you're probably not in good shape. And that's the same kind of thing that we experience with businesses. You need some outside influence. You need some outside perspective. So that's my advice to even businesses that aren't going to sell. You're going to keep going. Let's get some more outside independent influence in your kind of board of knowledge.
And I'm going to say, since I opened up my company 24 years ago, I've always had a coach in my business. Always had a coach. I've changed coaches. I've had one coach, I've had 4 coaches, but I always have a team around me of a really good accountant, a really good lawyer, a really good financial advisor, and a really good coach. if not 2 or 3 of them. And that's your team. And Ken's right. If you don't have that team now, and what's great if you connect them all together so that they can have conversations about you. And it's sometimes really painful, but the reality is that if you're comfortable, you're not growing. So get uncomfortable. And that's really important as business owners. Get uncomfortable because that's where you're growing. So put that team. Ken is so right.
Okay, so I have another question for each of you. I would like each of your perspective on this. If you could give business owners one piece of advice, just, what would you say that would be the best advice that you could give them regarding transitioning a business? And I guess I will start with Lori.
The first piece of advice, the most important, is understand what your true expenses are. Because that will all feed into the ultimate question of, am I going to be okay? And this is your personal expenses, not your business expenses. So whatever you're running through the business, we need to strip that out. We need to understand what your true expenses are, because only then can we start either planning to save money in the event that you don't sell, to create sort of a barbell of safety money versus risk in the business, or a repository or a repository of funds where when you do sell, if you don't receive the number that you want, at least you have a ballast at which to support you and your family. So the first order of business, and this is something that we do, I have a really nerdy spreadsheet that I fill out twice a year personally with my family, just to understand where our expenses are going and where they're coming from, and all of that. We have a great spreadsheet and some amazing tools within the Green Jade group that we put together to really help guide families through that process. And then we can move forward with the planning and the asset investments and allocation.
Okay, thank you. Marilyn, would you like to take that on?
Yeah, not to continue to drill it, but being prepared and just starting the conversation is my advice, right? We just based on this conversation, and if you've experienced it already, it's a very overwhelming process. There's a lot to think about, but it doesn't all need to be done in a day, right? So the sooner you start thinking about it, the sooner you can start having conversations and build your team so that you can not only mentally prepare, because it's a lot, but also be prepared with all these different aspects that you need. And in my case, obviously, making sure that your financial statements are accurately represented is important, and that might take longer at times than others, but just being prepared is.
Thank you, Ken.
Yeah, I'm gonna repeat, plan early, but I think plan early means, like the team we have in front of everybody right now, it's most of our clients have this team. They don't communicate with one another. We don't have, my most successful clients who are good at this, they have annual meetings at least with everybody on the team that we see here. We talk through things. We come up with an action plan that might be for the next year or two, but having all the people that we have here is great. Having them communicate with one another as a team in front of the client, at least on a regular basis, whether it's annual or not, that would be my biggest part of advice, because everything else that's going to benefit from them is going to flow from that team.
Mm-hmm. That's very good. I mean, communication
Totally
is
agree.
always, yeah.
Well, Ken said it the best, didn't he? But I'm also going to say this: so many of us work in our business and not work on our business. So if you're working in your business, then take one full day at the end of every quarter to sit down and work through all the things that we've talked about today, as well as planning for the next quarter of your business for the next 90 days, so that you are putting these things in place properly. So we all need to be working more on our business and not in our business. But if you can't, or if you're working too much in your business, at least one day a quarter to sit down and really do the planning you need with your team to make sure that your business is in a place that when you're ready to sell it, you can.
That's great. Thank you. We have another question from outside. We did touch on this a little bit, but tax laws always impact sale of your business. And how do you know when to plan around them? I mean, obviously, we do need to consult with our accountants, but is there like a strategic time of knowing how to plan around like certain things, elections, the tax laws might change and whatnot. So Marilyn, maybe you could take that on.
I can. A tax is not my forte, but certainly, right, there's always that uncertainty of what's happening with politics, the political environment, the economy. I think it's that conversation, again, is part of that preparation tool to bring in the tax accountants and also think about the structuring of a sale of what those different scenarios look like for you. So whether it's an asset purchase or a stock purchase, I know that's something that would need to be modeled and for you to understand what that means to you. Because at the end of the day, it's not how much you sell it, but it's about how much your net is, right? You can sell it for 50 million, but only net a smaller amount of, so it's, and like, I'm going to piggyback off Ken, it's really important for everybody here to be on the same page and to communicate so that when you start having those tax conversations, there's different advisors in place, right? You have your M&A tax advisors that are structuring the deal specifically, to get the most out of the net amount. But then there's also Lori and Ken's input as far as how else would we continue to save taxes with those profits and proceeds? So it's a different conversation, and very important conversation, as we all know. So that'll be an advisor that we would bring in for you.
Okay, thank you.
Yeah, I think I was just going to follow up on that. That's a hard thing to answer, right? Because we will always answer them with, these are the taxes that you pay right now. If you wait 5 years, taxes could be higher. They could be lower. We don't know. We have to optimize whatever you have right now. We do know, I would tell people here's what's going to happen. January 1, 2026, the so-called Trump tax cuts will expire. That means our top marginal rate will go back up to 39.6% from 37%. Whether that will happen, I don't know. Alternative minimum taxes, which we really haven't worried about recently, will come back into play. So if you're motivated by, the fear of paying taxes more in the future, you probably say now's the best time to do it. But, everybody knows that saying, we don't want the tax tail to wag the dog, right? We want to optimize whatever we're going to get. So I would say most clients, yeah, we'd like to pay less taxes, but to the extent we want to do something that's imprudent today, just to save some taxes, probably not the best strategy.
Okay, thank you. That's great advice too. So let's just to wrap up kind of in a way, I'll ask each of you for your final thoughts, but from what we've discussed today, it's never too early to plan, right? So things that we should walk away with from this today will be my final question to all of you is, what would you say are things that our viewers can walk away from this knowing it? Plan, know where you want to go, but always keep good documents and paperwork in place and get a good team behind you, right? So but that's what I'm walking away from this. So let me just start. Marilyn, could you please give us your finals, and we have some time yet, so you can go ahead with.
Yeah, everything you just said, right, and what we've been saying this entire time is being prepared. I mean, personally, what the product I provide and what I do for sellers that are thinking of selling their business in 5 years and 7 years, it's not a huge commitment, right? We'd obviously, everybody on here can understand where you are, and the scope of our services can be altered to what it is that you need today versus what it is that you'll need when you're really ready to go to sell your business. So I'd also put away that fear of a conversation's a conversation, right? It doesn't cost anything, but when you're ready to engage the team, don't feel like you don't need to wait to engage until you feel ready, right? Because I don't think you're ever going to feel ready. So there's always going to be products and places and conversations to be had that are molded to where you are in your place. So for example, with clients that I know want to sell in 5 years, I give them a snapshot and, you know, a small sample of obviously taking a look at their financial statements of what a QV would look like, right? So that they can start understanding the process, understand the terminology, and it's something that they can take on themselves and update and keep for their monthly reporting processes to understand what EBITDA and working capital is on a monthly basis. So it's a very usable product. You won't be able to use that to go to sell. Like you'd have to come back to us to put something much more official together. But still, it's just an example of if you're thinking of doing it in 5 years, or you just want to be educated on the terminology and what it is that your financial statements are saying in that process, or you're being poached and you want to understand the numbers a little bit more. It all goes on planning, getting the right people in place, but not to feel intimidated that it's going to cost you a ton of money today, right? It'll probably cost you less in the long run, the more prepared you are than the time you would spend if it was a fire drill and you're hiring and paying everyone much more money because it's an emergency.
Right. Okay, thank you. Lori, how about you?
So from my perspective, finding a financial advisor earlier rather than later, developing a relationship with someone who you trust, who has your best interest at heart, and can also handle the growth of maybe you have no liquidity today. However, if you do plan to sell your business at some point in the future, and it's 3, 5, 7 years in the making, someone who's willing to really develop that relationship with you and be comfortable managing a portfolio of a substantial size. What we see oftentimes is 2 things. One is a family will be working with an advisor for many years, and the advisor simply their average client is maybe $1 million of assets under management, and that's been fine for the family for the first call it 20 years of the relationship. However, that advisor might not be equipped to handle a substantial portfolio. And so making sure that you're with a team whose average client isn't necessarily 1 million, but has a larger or comfortability of working with the complex issues of estate planning, setting your family up with philanthropic passions, all of those things earlier rather than later is really important, because then what we find is that people outgrow their advisors, or they literally have a check in hand and they don't know who to hire. And so they make a very bad decision in terms of who they work with. And so I would say, develop a relationship with someone who you trust, who can handle the work that you would have in the future, and start from there.
Okay, thank you. Ken?
Yeah, well, of course you got to work with Morgan Stanley. That's my
Green Jade Group is fabulous.
But aside from that, I am going to ditto everything that Lori just said, because here's my experience. I'm the old guy on the panel. I'm just going to keep on saying experience, because I have my client, I had mentioned before, they've never sold a business. They don't know what they tend to have. The lawyer that's been working with them for years, they're not equipped to do the kind of stuff we're talking about. They have their accountant, they've been working with them for years. They're not equipped. I'm not saying it happens all the time, but to Lori's point, they may have a business that's worth $50, $100 million. They got $2 million in cash. They don't have any experience at actually managing that money. And their team members that I just described don't have a lot of experience on what gets involved in selling a business, and not only selling the business, keeping as much of it as I can. So my advice is, and sometimes this is painful, you need to assemble the A team, right? Because that's what you need working for you.
That's great, thank you. And that A team needs to communicate often. Let's just not just once a year, and not just when somebody wants to sell, like always know ahead. So Dr. Jean, Your final advice words, please.
So it's interesting you said that, Linda, because I'm going to play off of you. I think no matter where you are in your business, and no matter what type of business you are in, have the conversation, write it in your calendar to have the conversation of what if?
Mhm.
What if we were to sell this business today? What would we need in place? And if you start to make that list of what if, you will have a whole host of things you'll need to start working on. And then once you have that conversation, put it again in your calendar from a year from now. Just write in your calendar and have it called the what if conversation. And the what if conversation could be with your partner or your family or with your spouse or by yourself. But what if I was to sell the business today? What would I need? The second thing I would say is that what is your number? Because everybody as a business owner has a number that they want to sell their business for. What is your number? And does your business really live up to that number? Because so many business owners that I've met, they're like, I want to sell my business for $100 million. Great. Is your business really operating at $100 million to be sold? Because I suspect that it's not. So once you have the what if conversation, what is your number conversation? And every quarter, once you figure out your number, and I have to tell you, it's very hard for business owners to fill out their number. So this is where you talk to Lori and Ken and to Marilyn about what is your number, what's realistic, and what number can be is the number. Then your business has to be that number. It has to live that number every single day. And if you're not living that number every single day, then you're not going to get that number for your business. And that's really important. I think the third thing is that business owners are very nervous to ask for help, and they don't want to be sold to. The fact is that nobody on this panel is going to sell you, and most professionals are not going to sell you. We're here to help. So the reality is that you have to ask us for help, because we can see your problem, which is one of the reasons why you might think we're being pushy, salesy, aggressive. We're not. We want to help you, and we see it, and we've done it 1 billion times, and you've done it once. So the reality is that you are the smartest person in your business. We know that, but we're here to help. We're not here to sell you. And we want to help. And whether you hire us or not, call us and have the conversation, because knowledge is power. And once you have that knowledge, you will be able to eventually leave your business in the way that you want.
Mhm. Thank you. No, I mean, it sounds like, conversations, although need to be had, no matter what, the advisors have to have lots of difficult conversations with the business owners, right? So, I mean, how do you mitigate how do you mitigate a business owner with that? Do you just tell them, look, I'm the expert here, I know what your business does, but I know this side of it. Like, how do you go around that and try to get them to see your perspective on knowing that this is the best route to take?
Oh, I'm going with that first, because you have to be open to it. If you're not open to the conversation, no matter what we tell you, you're not listening to us. So the reality is, and you're not hiring us either, which is fine too. And then that's your mistake. And no offense and said with love when I say that. And there you go. And that's how I talk to my clients. But the reality is that if you really want to eventually be able to do something else, regardless of what that is, you have to be open to the conversation to be able to say, yeah, my baby's a little ugly and I need to make it a little pretty.
Yeah. For me, it's really allowing them to speak, and listening goes a long way. And also it helps me understand where it is that they're coming from and what it is that they don't understand and can't really hone in on. So it helps me explain it better, or, take a different approach to the questions I'm asking. But I think they just, again, like we said, it's an overwhelming process. They can feel like they're being attacked. It's their baby. You're telling them it's ugly. Nobody wants to hear that. So it's more about, for me, it's helped me listen to them and find better ways to communicate what I need to say. But at the end of the day, it's the same message. It's maybe just delivery is important.
Marilyn, I couldn't agree with you more. We listen. It's really, that's one of the compliments that we get the most is after an initial meeting, I feel like you really heard what I was saying and not just dictating what I should do. And that's really what's the most paramount thing for what we do with our clients and the families who we serve is, are we listening to you? And are we delivering what you want, not what we think you should want? And getting uncomfortable in those conversations and sometimes saying, okay, this is the reality. These are the numbers. When you put pen to paper, this is the data. And you might feel this way. If we look at the numbers this way, how can we bridge these two discrepancies? And then it's having a resetting of expectations conversation. And that's when we roll out the couch and, bring Dr. Jean in and have the psychology conversations of, how do we bridge this? Because this is reality.
Mm-hmm.
And if we can't bridge it, then you know that you're making a decision, because doing nothing is also a decision.
Yes,
Mhm.
I would agree with that. And I will say to you that any professional you hire should absolutely be listening to you 100% and knowing what your wishes are. However, the reason why you hire an outside person is to get a different perspective, as Ken said. And the reality is, if we're not willing to enter the danger and tell you the things that you need to hear that no one else is going to tell you, you're not going to be as successful in selling your company as you'd like to be.
Right. Ken, have you had uncomfortable conversations with your client? And, how do you go about mitigating that?
Well, it's a dose of reality, right? However that can be conveyed to them. I always feel like, and I think everybody usually agrees, when you can tell a story to somebody that's going to be more impactful than here are the, capital gain rates. Here, you tell them all kind of technical data or legal information. It doesn't really move the needle. If you tell them stories about what other people are doing, in my job, because I'm exposed to so many different areas, business owners selling, not selling, they like to hear about, well, what are these other people doing? What's going on in the market right now? So that gives them a base of information to work from and not think, here's my situation. Nobody's like me. And we try to tell them, yeah, there are a bunch of people like you, and this is what's happened to them. Sometimes they're good stories, sometimes they're bad stories, but those I find more impactful than just giving them, a bunch of tax data or legal data. That gets them off the dime, or it doesn't get them off the dime, but whatever, they're much more prepared to make a decision.
And remember, they're not difficult conversations. Like, let's put it in perspective. Like, you're like, oh, how do we have the difficult conversation? We're here to help. And we're looking at holding your hand through this process that you've never gone through before. So for us, we understand where you're going to feel not happy, or you need more information, or you need more support. Like, we don't look at them as difficult conversations. We look at them as, how do we help you get to the place that you want to go? And it's really important that we get you there to get the result that you really want.
So both parties need to listen. The team needs to listen to what the seller wants. The seller needs to listen to what the team is saying, and everybody can work. It's a win-win for everybody in the end. If you have the right team in place, if you plan properly, if you have all your documents in a row, and if you know what you want to do afterwards, right? So that being said, I do want to say thank you and wrap it up now with thank you to Lori and Ken and Marilyn and Dr. Jean. You've all been so helpful in getting some of the, giving a lot of food for thought to our attendees today. At least it's a good place for everyone to start to know maybe where they should go, what they're lacking, and, to start putting those wheels in motion for when they do want to sell their business. So thank you to everybody. I hope you have a great rest of your day, and I'm going to turn it back over to Thomas. Thank you for Thomas.
Thank you all. Thank you all for joining us. Thank you to our panelists. Thank you, Linda. And thank you for all of our attendees. And a special thank you to our sponsors, Citrin Cooperman, Caveman Brain Business Growth System, the Green Jade Group, and Morgan Stanley. Thank you all again, and enjoy the rest of your day.
Thank you.
Take care.
Thank you.